Today I want to talk about another cost associated with home ownership. Whenever you own your own home, oftentimes, and we'll get into why you may not have this, but we usually have homeowners insurance in case of a fire, and your structure, your house is just burnt down, or a flood, or theft, or all kinds of things. Insurance covers some things, not everything, but if you have hail damage. I had hail damage on my roof and the sides of my townhouse, and that was the first homeowner's insurance claim I'd ever made just a few years ago. And I've had homeowner's insurance for most of my life because I've owned a place most of my life. So sometimes you never use it, but it's good to have when you do need it. So today we're going to talk about the top 5 most expensive states and the 5 lowest cost states on average for homeowners insurance. This isn't for a certain dollar amount of your house. It's the average cost in each state. So let's get going. Today I'm using a map from NerdWallet, and I will leave a link to it in the description below so that you can look at it. And what you do is you just hover over a state and the average price for homeowners insurance in that state will appear. So it's pretty handy to compare right there, and these are 2026 prices for homeowners insurance. So I'm going to look at my computer. Surprisingly to me, the highest or most expensive state for homeowners insurance on average is Oklahoma. And I'm going to go find Oklahoma here on the map. It's on average $7,255, $7,200. Then that's about $605 a month. That's a lot, I think. And second, Nebraska. I wouldn't have guessed that either. It is $6,015 for the year, which comes out to $501 a month. The third most expensive is Kansas. It's $5,455 on average. Of course, if your house is much less expensive, it's not going to be that much. And if it's a lot more expensive, it's going to be higher than that. This is the average when they take all the, homeowners premiums in the state and average them. That's what these numbers are. So in Kansas, it's about $455 a month. Arkansas is next. All of these are surprising to me. And it's at $4,955 a year, or about $413 a month. Next, the 5th highest is Texas, and it's $4,915 a year, or about $410 a month. I thought Florida would be on there. I really did, because of all the, I don't know, what do they have? Hurricanes and flooding and, just places wiped out. But I know Kansas has tornadoes, and these other states obviously do too. They have something that causes the rates to be so high, and we'll get into that in a little bit later. Now for the cheapest states. According to NerdWallet, Hawaii is the cheapest at $900 a year, or about $75 a month. Vermont is second cheapest, $1,170 a year, or about $98 a month. Delaware is third cheapest at $1,365 a year, or about $114 a month. Alaska is 4th cheapest at $1,385 a year, or $115 a month. And the 5th cheapest is New Jersey at $1,480 a year, or about $123 a month. All of these are surprising to me. I don't know. It's just what I imagined the prices would be. So it's kind of interesting to learn. So let's talk about why insurance costs vary so much. The main drivers or factors are weather and rebuilding costs. Some of the specifics are hurricanes, tornadoes, wildfires, hail damage like I had on my roof, flood risk, and then rebuilding, which includes the labor and cost of materials. That can vary a lot by location. And some insurance companies are just leaving the market. They are not going to participate in providing homeowners insurance in some areas where the risk has become greater and basically they're having to pay out more, which is kind of, unfair, I think, because that is what insurance is for. And when it gets tough, they leave, which doesn't seem right to me. Basically, a lower priced house can be a bargain, but not if it's in an area where the homeowner's insurance is, the rate of it is a lot more expensive. So that's just something to consider when choosing where to live. Because if you pick a place that is in high danger of weather-related, events that can damage your home or, total it, totally demolish it, your insurance rates will be higher, which means a higher monthly or, yearly cost to consider. Homeowners insurance costs are affecting people most, they feel it most, who are on a fixed income, like retirees or just people who don't have the chance to make a lot more money for whatever reason. And it's just something to consider, because if you don't have more money coming in, having to pay more can become a big problem. Some people are rethinking where they want to live or where they can afford to live based on homeowners insurance costs, as well as, factoring in everything, all of their expenses. So some things you might want to do if you are considering moving is go on realtor.com or Zillow and look up a house where, the price range and the area where you might be considering moving. And then talk to an insurance agent. Give them that specific, just give them an address for a house that's for sale. And they will, be able to give you a quote of what the homeowner's insurance would be. And the coverage, it would include deductibles of what you would have to pay before the insurance kicks in. So that you have an idea, before you even consider buying in an area, and the price range of whether you can afford the homeowner's insurance also. You can look at flood and fire risk maps to see if that, because if they're in a high flood zone or a wildfire area, those factors will probably raise the homeowner's insurance premiums. Older homes may cost more to insure, and the age of the roof matters. This is something that I found out when I bought this place, my townhouse. An insurance adjuster came out before they would insure me to look at my roof to see how old it was and what condition it was in. And they gave me insurance. It wasn't a problem, but I had never been up there. I don't get up on the roof and look. So they came and looked for themselves and took pictures, and probably my premiums were affected by the roof, age, and condition. And speaking of deductibles, the deductible amount, like if you have a $1,000 deductible, you would pay the $1,000, and then the insurance would start paying for damage or, to replace or repair a portion of your home that was damaged. So looking at deductibles and maybe having a higher deductible if you want a lower premium. If you have that money saved, that might be a way to avoid extremely high homeowners insurance premiums. And some states, like we saw, are having higher premiums because of different weather-related events that are happening. And homeowners insurance used to feel like one of those boring topics that you just didn't think about. It was something you bought it to have your house covered. But now I think it's a bigger factor. There are just so many expenses, and that's becoming one of the larger ones, I think, to consider, right along with property taxes that we talked about previously in a video. I would recommend, as well as looking at the cost of the house or condo or townhouse or whatever you're planning to buy, also look at that homeowner's policy and make sure you can afford it. Thanks so much for watching, and please share if you have any experience with homeowners premiums and coverage, whether your company paid out a claim. It's great to learn from each other about all of this. So thanks again, and I'll see you next time.